Thanks for checking out ChartGuys.com, the definitive home for technical analysis online. Our passion is understanding the market and identifying trade opportunities. Our goal is to share our success with others through consultation, training videos, and educational course materials. Get the skills that will make you a more confident, effective, and informed trader. Join us today for access to daily analysis and live market coverage, a thriving community of over 1,000 active members, and hours of exclusive educational content. Come for the education, stay for the community.
Everyone checking in on the market on this fine spring Sunday. We're going to look at SPY, IWM, QQQ, the financial sector, the biotech sector, and the volatility index. We ended on a very strong note. The last 2 weeks, we've closed at the high of the week, and the S&P 500 is 2% away from all-time highs. Weekly chart has clear higher lows for us to be watching, and every single time we come to a crossroads where we say, all right, this is where we're going to see, whether the bulls or the bears have it, the bulls prove themselves every single time. So we've had the V-shaped recovery to continuation. We had the 4-hour equilibrium bull break with all continuation since that bull break has occurred. And there's just no sign of the bears anywhere. At this point, the daily uptrend has been intact. Or I should say the daily pattern of higher lows every day, 7 days in a row. That's now the pattern that I'm watching in the short term as signal number one, because when that pattern is lost, we can then zoom out and say, okay, daily consolidation is underway. Anything above 277.93 is a higher low. So we know that unless there is massive bear volume behind the next pullback, we will form a daily higher low and we will stay in the daily uptrend. We have the China and US trade talks as this dangling carrot, as we know, that continues to keep this going higher. We keep getting closer and closer, and then they back off and say maybe a couple more weeks, and who knows when that news is going to actually come. People are starting to wonder, is it going to be a sell the news event? And that's entirely possible because, again, as long as you have that dangling carrot, psychologically speaking, the market is pricing it in, and the more likely a deal becomes, the more that deal gets priced into the market. So just be aware that that event alone isn't necessarily a buy now signal. That may be a sell now signal, and we're going to be watching. The more overextended we are into that deal, that means the more it's priced in, and the more likely we're going to get a sell the news event. So that's something we're keeping an eye on, but again, at this point, bulls just have really little to worry about. And we obviously want to be protecting all of our positions. And if we do see a pullback, it's probably going to be the kind of fast, swift pullbacks that we have seen. If we get any kind of meaningful pullback, I should say, it will likely be fast and swift, but otherwise just little daily higher lows. And bull is certainly the direction to be looking at this point. So looking at IWM, we broke our key 156.53 resistance. That increases the odds significantly that we'll just get a daily higher low in continuation when the next period of consolidation does begin. The weekly time frame has a new higher low set at 148.41, and it's heading up to the recent high of 159.50, trying to get continuation. We're still a ways away from that all-time high. So big difference in that regard. We're looking at a 10% plus move to all-time highs, and the S&P 500 just needs 2%. So IWM is lagging behind, but that bull break on IWM, in part because of the biotech pattern that broke bullish that we are going to look at here in just a moment, and that is correlating to the healthcare sector, which has a decent percent holdings in IWM. QQQ trying to confirm the daily bull flag. Extremely healthy, short-lived consolidation into the bull break. If we can get over 184.92, that will be confirmed. And the all-time high is the next level, 187.53. It was a double top at that all-time high. So we'll be keeping a close eye on that level. And let's see the percentage gain needed to get to that all-time high. We need about 1.5%. Bull's extremely strong, heading up towards that level. We're going to look at oil on the commodities video here. Oil is just as strong as the S&P 500. Certainly something to be watching as well. And keeping in mind that we do have earnings approaching in a couple weeks. The financial sector will kick it off for us. And then the tech sector is going to be the most important as well. But we're still watching for the lower high compared to 27.10. And we're just patiently waiting for our higher low everyday pattern to break to indicate that our daily lower high has been set. At this point, it is now 9 days in a row with a higher low every single day. And that is keeping the bulls for XLF in full control. 26.52 breaking on Monday would change that, and we would look for the higher low to then form. XBI, so here's that bull break. We had the quadruple top with resistance. We formed another higher low at 90.95, and then we broke that resistance level, and there was some nice bull break and then back test of that resistance first thing on Friday morning. So here we are rejecting from it yet again. We pulled back, we broke it, came back tested support a couple times, and then just saw continuation for the rest of the day, closing up near the high of the day. So this is now continuation for the biotech sector. The next clear resistance level on the daily is 95.34. And looking at the weekly consolidation into continuation, now again, we're looking back up towards that all-time high, although we do need about 9% or so to get there, so still a ways away. But again, just another bullish indication, another bullish sector in the market, and the volatility index dropping down to lower lows. So we did finally break this level. Bulls attempted to see this pattern tighten, and we did dip and then close above it. So we're still watching this 1240 level as the bulls are going to try and hold it, because if we lose that level, let's zoom out to the weekly, because the next zone with a lot of price action to be watching is where we faded into back in, let's see, that was 2018, where we were down around the $10 and $11 range. So right now the bulls are trying to hold the $12 range and build a base of support, but if that fails, we're heading down towards the $10 and $11 range. And as you can see, we had chop pretty much all May of 2018 all the way to September. So that's looking at about 3-4 months of just straight sideways chop, and we have to be watching for that potential again as we're entering similar months here in 2019. So bottom line, do not fight this trend. Hedging is one thing, absolutely. If you have bullish longer term positions, hedging is something that you should probably be looking into. I personally am not looking at any hedging on the short-term horizon. I need to at least see the daily uptrend lost before I'm interested in entering a hedge, again, for my parents' long-term retirement portfolio to try and protect against that. I personally am mostly cash as a short-term trader, so I don't need to hedge against my own positions and holdings. But fighting against this trend right now is not ideal. Being ready for a pullback, having a game plan established if we see some kind of black swan event or some kind of huge bear volume and big pullback is a great idea. Having that plan established, so if it happens and you see the signals you're looking for, you just need to look at your piece of paper next to your computer that says, this is my game plan, and then you just follow that game plan. And you can even write down what's the criteria that would lead to enacting that game plan. Maybe 40% more than the 20-day average volume on a very bearish day. Maybe that's your indication, or maybe it's a fundamental reason that you're looking for. But again, stop losses on any bearish positions because these bulls are on fire. Stop losses on bullish positions to protect any gains at this point. And we're looking up towards all-time highs. The marijuana sector, last time the S&P 500 was at all-time highs, was thriving. You have to also imagine or think about the psychology of the market. Right now, we have the cryptocurrency market running in the last couple weeks. We have highly speculative markets like Canadian MJ and more specifically now US marijuana stocks, which have more ambiguous legal structures going on. And those two sectors are running very strong with 50+% gains in a very short amount of time. That tells me that the market is extremely comfortable because those are very speculative places to be putting your money, and people are comfortable enough with the well-being of the market that they're putting their money in high-risk speculative places. So I almost look at those two sectors as a bit of a gauge, a risk tolerance gauge for the sector, or I should say for the market as a whole, which certainly is confident. So we'll keep checking in. Hope you have a good rest of your Sunday, and we'll see you tomorrow. So adventure time, we are heading back from Vegas, going to the East Coast, heading to Florida for me, and booking it through Texas and Mississippi in the South. Didn't take a whole lot of time. It was winter at this point. We're talking December, January, so snow on the ground, and I didn't think it got that cold in Texas, but it does. But there were some great state parks, and state parks are kind of like national forests in the sense that if you're there on weekdays and it's not the summer, there is nobody there. So didn't expect to see frozen water in Texas, but some nice views and some nice hikes. And this was a little state park, and I was literally the only person there. Camping out by myself and trails to myself, and it was great. So just avoiding the rush hour and not feeding the alligators can give you some solitude. And it wasn't too cold. Definitely had to bundle up at night, but certainly after that 12-degree night in Zion, everything else was just a bonus. And some nice trees and nature and angles of sunlight at golden hour. And from here, I did go on a little road trip in Florida, so we'll cover that next. And that's the end of my Honda Civic. So had that Honda Civic from high school, drove it across the country twice, one time with my buddies from North Carolina to California, down the coast, back across the South, through the Occupy movement, then took that individual road trip. So certainly spent a lot of time with that little guy. It's a good car. Never really caused me much trouble. And sent it off. I donated it that year. And my taxes were such that the donation didn't do anything for me. So I could have just given it away to a friend. But hopefully it helped out somebody. What else we got here? CBD. I found this photo. This is 5 years old. I was taking CBD before it was the hip thing to do. I forget which company made that. It certainly wasn't public, but probably not trustworthy either. Nice to see that we are getting some legitimate companies and some standards. Looking forward to standards in CBD because we don't know what mold is on those flowers that they're getting their CBD from, and we don't know what extraction methods they're using. So we do need some kind of regulation in that industry to ensure quality standards are kept. So I am looking forward to that part of things. And I'll see you all in the near future. And we'll go over a little Florida road trip, which is cool as long as you don't do it in the summer. And I made that mistake and it was miserable. So have a good night. We'll see you soon.